some people call it like a gun to your head, because you have to dilute and you have to put in more money, or else your ownership gets slashed. We announced this so-called dilutive financing, which basically gives everybody a right to an in-the-money call option starting a month from now. In full, we raised about $60 million, and when we announced the deal, before we raised the money, the stock went limit up for 3 days in a row, right? So we announced a dilutive transaction. The efficient market hypothesis says the stock goes down. The stock went up, right? So that kind of flew in the face of traditional wisdom.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, joined today by Phil and Dylan from Metaplanet. Hey, how are you guys?
Hey, Pierre. Thanks for having us.
Doing great, Pierre. Thanks for having us.
Well, we wanted to have you on the show to kind of provide a bit of a recap on 2025 and kind of what you're expecting in 26 going forward, and kind of seeing what the latest trends are and Metaplanet's activities, of course, as well. But, for those in the audience who are not familiar with this Japanese hotel chain, maybe we could get into kind of a brief overview of the history, the journey to where it is today, and kind of set a lay of the land. If you want to kick it off, Dylan.
Yeah, sure. Metaplanet, we're a Bitcoin treasury company. I think Bitcoin company in general. We're trying to be a bit of everything, but the journey started far before 2024 with Metaplanet as Red Planet, and that was sort of a budget hotel chain, pan-Asian. So budget hotels in Japan, Indonesia, and Thailand, and a couple others, like about 30 properties. And COVID happened, and that was obviously a tough time for a lot of industries. And so the management team, of which a lot kind of stayed through the transition, Simon at the helm, decided that there needed to be some sort of pivot. And so through the restructuring, going from 30 hotels to one, found Bitcoin. Well, already had found Bitcoin in a personal capacity, but decided, after seeing Michael kind of plot the course with strategy, decided that Bitcoin made sense through a corporate lens. So started to do some of the work to see how this could be done in Japan. It hadn't been done in Japan yet. And so kind of, was a trailblazer in that regard in the Japanese market. And so at that point, Metaplanet was pretty small. It was a $10-15 million hotel company, and adopted Bitcoin as a reserve asset, and started with just 100 Bitcoin, which is a lot for me or you, but the average person. But for a public company, 100 Bitcoin is not all that much. Just a few $1 million. And from 2024 to 2025, grew to be one of the most active capital market players in the world and in Japan. So in 2025, we were the largest equity issuer of common stock in all of the Japanese market. So, right now we have about 3 billion and 3.5 billion of Bitcoin, 35,000, number 4, I think, in the corporate rankings. And we have high aspirations, but it's tough to describe, but there really is sort of a movement over there in Japan. We have 200,000 plus Japanese shareholders alone, mostly retail, institutional as well. But there's this sort of hive mind and this culture that I think there was a little bit of we saw with strategy or MicroStrategy in 2020 and 2021 that I think we're replicating like 4 or 5 years after. So it's pretty exciting, and there's a ton of energy over there, and it's really cool to be play a part of it.
Yeah, Phil, people might know you from your previous role at Unchained. So tell us about your new role at Metaplanet. I'm really curious to hear about that.
Yeah, so I've been active in Bitcoin for quite some time. Started working in Bitcoin professionally in 2017 and joined Unchained in 2019, and then recently departed last summer and joined up with Metaplanet in September. So I've been with Metaplanet now for a few months. And it's funny, as Dylan was mentioning, the history of Metaplanet, I was laughing a little bit to myself, thinking about how, for a while, especially maybe early 2020, 2021, a lot of Bitcoiners were joking about selling all their personal belongings, beds, chairs for more Bitcoin. And this is a scenario where a public company kind of took that literally. We sold our properties, sold our beds, and stacked sats. And it's really radically transformed not just the company, but really the markets in Japan.
Yeah, that makes sense. So something I've noticed on social media when people talk about Bitcoin treasury companies is that there's folks who just hardline are opposed to all of them. And then there's more moderate ones that say, oh, only Strategy is a legitimate Bitcoin treasury company. And then others will say only Strategy and Metaplanet are legitimate Bitcoin treasury companies. So it seems like it's going to be an ever expanding list of companies that are successful in capital markets activities. But it doesn't seem like it's what the naysayers say, which is you're just sitting on your Bitcoin, right? And that there's not any kind of activity happening. So you want to dig into kind of what the capital markets activities look like under the hood and how that creates value for the shareholders.
Yeah. Well, as an operating company, there's a lot of different tools that we can utilize, and so mainly we've utilized common stock, common equity as a financing tool, and so that's looked. We've done that in a few different ways. Our journey started. Our first capital markets transaction on a Bitcoin standard was a rights issue, and typically it was a free rights issue. And rights issue, it's pretty uncommon. It's usually something that's it's like a last resort sort of a tool. It's defensive, right? So a company has a ton of debt and they need to restructure, and they do something that's extremely dilutive, which is offer every shareholder the right to buy the stock 90% cheaper than what the share price is. It's basically like, some people call it like a gun to your head, right? Because you have to dilute and you have to put in more money, or else your ownership gets slashed. And for us, we looked at it. We did a rights issue a little bit below the market price, but it was at a very accretive level, right? So it was like 100% dilution optional for you if you held shares at say a 3x MNAV, right? And so and we announced this so-called dilutive financing, which basically gives everybody a right to an in the money call option for a month. Starting a month from now is more or less what happened. And it was a little bit more bureaucratic than that. We had to mail out, 15,000 manila envelopes across the Japanese islands chain. And it was a lot of paperwork and stuff to do with, IR firms and whatnot. But we exercised in full. We raised about, $60 million. And when we announced the deal, before we raised the money, the stock went limit up for 3 days in a row, right? So we announced a dilutive transaction. The efficient market hypothesis says the stock goes down. The stock prices say 60 and we announced it at 55 for the exercise price. The stock should go down. The stock went up, right? So there's things that, that kind of flew in the face of traditional wisdom. We also utilize moving strike warrants, which is basically the equivalent of like the ATM in the United States. And we also did a secondary offering, a follow-on offering of common stock. So we went to institutional investors internationally and did the largest equity market, capital market transaction in Japan last year, raising $1.4 billion in a follow-on offering with Morgan Stanley. I think that was actually, just looking at the timeline, what brought about the MSCI to have questions, which is another topic we maybe could talk about later or not. But those are the kind of the common stock financings that we did, and we really, especially the moving strike warrants, are something that are gives us a lot of flexibility, right? When the markets are enthusiastic and strong, we can raise capital, but also we have the flexibility to pause, right? And so over the last call it three months or so, we haven't sold equity, common equity. We looked at and this is because of our valuation, right? So we're evaluating all our economic calculation based on our enterprise value and what's the value, intrinsic value of our business, or our Bitcoin stack rather, right? So it's less so about Bitcoin's price. People give Sailor flack, or they give Metaplanet flack for buying Bitcoin high or buying Bitcoin when it's not, they should be buying lower, right? But we're evaluating economic calculation in Bitcoin terms based on the value of our company. We're not looking at whether Bitcoin's fallen, 2,000 or up 2,000 yesterday. And so I think that's something that is, a bit different than the traditional, capital markets, right? But we're really excited in particular about perpetual preferred stock This I think is the big unlock. Strategy is proving this model right now, and it's with huge success. And we've stated publicly that we want to look to IPO 2 different prefs this coming year. And so this would be a first in the Japanese market. We have a private issuance out already. So we issued convertible preferred stock in November for about 150 million notional at 4.9%. So pretty attractive terms. And I think this is something that is going to give us a ton of flexibility and a kind of a new tool in our arsenal, right? So depending on whether the stock is strong or not, we can lean more on the debt-like financing through the prefs. But ultimately, after talking to a lot of these credit investors, the people that invest in a fixed income instrument, they're really, it's the mindset is very different. You talk to an equity investor, you talk we're raising our public offering, raising common stock in October. The conversation is, what is the upside? What is the bull case? Where do you think Bitcoin does from here? How do you think about the market? With credit, with the preferred, with the fixed income investors, it's sort of the opposite. It's defensive, right? It's how can things go wrong? What's your kind of view on the capital structure? Where do you take things from here? How do things go wrong? So it's interesting that both the kind of the bulls and the defensive fixed income investors are evaluating a new asset class of Bitcoin-backed securities. And so we're pretty excited to be on the forefront there, and we want to have a tool in our arsenal for every sort of situation.
So historically, for Bitcoin, the leverage in the system has been fraught with the risk of liquidation. So obviously, Bitcoin being very volatile. Going back many years now, we had Bitfinex, BitMEX. Now we've got CME futures and IBIT options. This whole kind of system of leverage that is very fragile in a bear market where you have cascading liquidations and people kind of getting flushed out. How do you position Bitcoin treasury companies and Metaplanet in regards to kind of the leverage historically in Bitcoin and the critique of Bitcoin's too volatile? You can't lever up against it as kind of a, or even people saying that treasury companies are over leveraged, which, as you point out, I don't, to my knowledge, Metaplanet is not currently levered.
Yeah, so we have a tad bit of leverage. I think on a long time frame, we want to have a minimal to no leverage capital structure with a focus on preferred equity. So it feels like leverage, it acts like leverage, but it's technically not debt and technically not leverage. Right now we have 280 million of debt against our 3.4 billion of Bitcoin. That's in the form of a credit facility. That's utilizing Bitcoin collateral, right? So and it's very flexible. One of the things that we heard from the stock exchange as we were kind of going about our process was, well, what's the purpose of raising this capital to buy Bitcoin? And one of the things that MSCI said was, not to us, but just in general, was like, well, this sort of looks or feels like a trust or closed-ended, just a passive vehicle. Well, a passive vehicle can't utilize Bitcoin as collateral, borrow capital, and then decide, instead of issuing stock, well, we could buy some stock back, right? Or we could go invest in a complementary business line, or we could utilize the derivatives market to generate income, right? So just after we raised our $1.4 billion public offering, the Bitcoin market and the equity capital markets more broadly for Bitcoin related securities was weak, right? And so we decided to pause our equity financing. And we said, hey, well, we have a $500 million credit facility we can draw down. We're not obligated to. We haven't yet. But if the market forces our hand, we could buy back our stock. And we said that, and a lot of people were sort of trying to play a gotcha and saying, well, Dylan, you said that Bitcoin was a new stock buyback, and now you're saying you're going to buy back your stock. Well, I was like, no, this is what a capital allocator, this is what an issuer does, right? If someone is saying that your stock is so undervalued that you can buy it for less than what it's worth, then I think anyone would want to do that. And so we'll do that if the market lets us or forces our hand. And so that's something that a closed-ended trust or an ETF couldn't do, and that's flexibility for us. On the leverage, right? We're very under-levered. I think relative to any other industry, relative to banks, relative to even, consumers that take on, mortgages or whatnot, Bitcoin treasury companies, Sailor has like 9% leverage. I think we're basically right there as well, 9-10% leverage. In the form of the prefs, there's another, 10 to 15%. We have about 150 million of notional prefs, so call it, 5% or so. But the leverage is very small. I think Bitcoin treasury companies are taking a bit of the volatility as I think I've heard Adam Back call it like a shock absorber, right? So the volatility is sort of kind of finding itself in the common equities of these proxies, and the absolute drawdowns aren't as drastic in Bitcoin itself. So I think there's something there. The volatility is higher, the drawdowns and the upside are larger, right? So I think that makes a lot of sense. And I think our shareholders understand that, right? They understand that on the upside, companies like Metaplanet with a bit of leverage or amplification through preferreds are going to outperform Bitcoin. But also, there's risk on the downside. And as an investor in Strategy or Metaplanet, you underwrite that risk. You know it's correlated to Bitcoin, and you kind of accept that.
Yeah, that makes sense. Okay, so on the volatility, if we look historically at Bitcoin cycles, you had a bull market in 2013, a bull market in 2017, a bull market in 2021, and then in 2025, so these are each 4 years apart. In 2025, we were down, I think, 8%. So how do you read kind of the evolution of Bitcoin's price path? Are you a power law believer, or what's your heuristics for that?
I mean, I think all models are useful. What is it? What is the phrase? All models are wrong. Some are useful.
Yeah.
I don't think we put too much thought into the 4-year cycle. We do look at the data, right? So like stuff like the on-chain cost basis and even simple heuristics like the 200-day moving average or stuff. I think that is useful, right? But it's not law. It's not, it's if Bitcoin goes up or down a certain amount, we're not going to sell or stop buying or whatnot. So I think we're fine. People, some of the skeptics will say, well, your cost basis is X and the price is Y. So, pack it up and go home. And we're like, well, we're playing the long game here. And compared to where we were 12, even 18 months ago, we've done a lot. So we're not too really worried about the cost basis. Last quarter, we think Bitcoin is going to $1 million or, a lot higher in fiat currency. So we're not too worried. But as for the 4-year cycle, I mean, to be honest, I think it's probably more to do with PMIs and the macro dollar liquidity than like the Bitcoin halving at this point. I'm not sure what your Phil's opinion on it is, but we don't really buy too much into that, one way or another.
Just like with a lot of individual holders, we always go back and reference first principles about Bitcoin. Does it still have a fixed supply of 21 million? Is there anything technical that has changed? If not, then we're still in it for longer term. And yeah, paying attention to kind of the short price fluctuations is not what we're here for. We're playing the long game, just like many people who've been holding Bitcoin for a long time. Pierre, you also mentioned something that I think is really interesting about people thinking about, are there too many Bitcoin treasury companies? Are they all legitimate? Are some of them not? And again, for me, I like to just go back to first principles and think, okay, well, is Bitcoin the best form of money? In my opinion, yes, it is the best form of money. Who needs money? Well, everybody needs the best form of money. Individuals, governments, businesses. And what do investors like? Investors like businesses that have good money, that have money, right? If you compare Bitcoin to something like fiat currencies, fiat currencies in a lot of ways don't even qualify as money. They're more akin to like a scrip, right? They're issued by a central authority. You can use them in a certain jurisdiction. Now the jurisdiction is very large, of course, especially for the US dollar. But it's not neutral. Whereas money, Bitcoin is neutral. So I think that that really all companies will become will own Bitcoin because all companies need money to continue operating. Now, the ones that are smart currently are finding those market opportunities where they can accumulate money faster than other companies. I think Michael Saylor and Strategy is a really great example of that. They've found great product market fit where they're able to accumulate lots of money at a much faster pace than any company. I mean, if you compare Treasury's, Bitcoin stash to, a major company like Apple. Apple has 0 Bitcoin as far as we know right now. And what they're holding is lots of US dollars. And if you think about, what's the ultimate supply of US dollars? Well, it's infinite, right? So if you look at their current treasury and divide it by infinity, you can kind of round that down to 0, whereas Treasury has multiple billions of dollars of good money. So that's where I kind of see why, like, for me, from a first principles perspective, and that's maybe like very basic, but that's why we see so much volume and volatility when it comes to Bitcoin treasury companies, because it's the market discovering, oh, hey, these companies are figuring out what money's good versus what money isn't good. And then to Dylan's point, now that a company has money, there's a lot of things that we can be doing that is different than just saving, right? So, what's really cool about Bitcoin is, to me, is really breaking out that concept of saving versus investing. And if you want to save in Bitcoin, you can hold the keys to your own Bitcoin. You have the ETFs. It's a very good way to save in Bitcoin. But if you want to start investing in growing the Bitcoin economy and trying to invest that Bitcoin, that's where the companies come into play. And yeah, companies can do all kinds of different things. So yeah, just a couple thoughts there.
Yeah, and it seems like whether it's MSCI or the skeptics on social media, the through line is that they're happy about investing and operating cash flows, but they don't like long-term savings, as conceptually doesn't really fit into the worldview. And I think that was true before Bitcoin treasury companies existed. That on an individual level, there's this Keynesian ideology that is opposed to long-term savings. But then when it went onto the public stage with a publicly traded company, now that debate surfaces into investment decisions of, do you buy equity in a Bitcoin treasury company or not? But also regulatory decisions about what's the appropriate amount of money for a company to hold, which, in a free market, that wouldn't really be a real question. But there are obviously gatekeepers in today's passive finance world. Is that kind of how you see the why there's friction on the topic of just holding Bitcoin for the long term?
I think when we first started our journey, and we bought some Bitcoin, but and that was we had some outstanding warrants and stock options in April of 2024 that were exercised. It brought in about a few $1 million of cash. That was the first 100 Bitcoin that was purchased. But after that, when we wanted to do the rights issue, and we went to the stock exchange and said, hey, we want to raise $50-60 million. We're going to go to shareholders. It's going to be optional. Well, they were saying, well, you're a hotel company. What's the purpose of Bitcoin, or just this speculative asset? And we were like, well, no. Like, think about it. We're a physical real estate company, as you say. And what do you do? What can you do with a building? Well, you can finance it. You can borrow capital against it. You can sell it. You can utilize it to generate cash. And so what can we do with digital real estate? What can we do with our Bitcoin? Well, we can finance it. We can utilize it in the derivatives market to generate cash. We can sell calls. We can sell futures. We can utilize this asset. And so, it was just theoretical, but now, along with our core HODL stack, which we have 35,000 Bitcoin, we have that in cold storage. We do have sort of an active strategy where, as we're raising capital and as we're going through the process of buying the Bitcoin, we can buy the Bitcoin in the spot market. We can buy the Bitcoin by getting struck or getting put on a put option, right? So if we have, say $100,000 of cash, we can buy one Bitcoin for 90,000, or we can sell a $90,000 put option and get paid for it. And so and that's a very simplistic way of doing it. I think we're a bit more sophisticated in our approach there, but I think we're generating a lot of cash right now through our buying of Bitcoin. Last quarter we made $27 million of revenue through our income generation strategy. And so for the regulators and kind of to understand our business model, it's not just like, hey, we're accumulating this dumb rock and we're sitting on it and we're doing nothing else. There is sort of an active management here, and we are capital allocators. And so when we raise equity, it's not just like, okay, we're going to buy Bitcoin and sit on it and do nothing with it. No, we're utilizing the Bitcoin as collateral. We can utilize Bitcoin or the Bitcoin market, Bitcoin adjacent market to generate income. With that income, we can service preferred dividends. We can service interest expense, right? So there's this whole machine here around Bitcoin, the core asset, Bitcoin as collateral. And so that was something that I think for a new business model, phrasing it or putting it in the terms that they can understand, that legacy assets like a hotel chain or like a real estate building, well, okay, that makes a little bit more sense. And so I think that approach was successful for us, and now the next stage is saying, well, okay, Bitcoin implicitly can serve as the bedrock for a foundation of preferred equity or fixed income instruments, and so that's the next phase for us, and we've taken the first few steps there, but kind of the full blitz is what's come next.
Another kind of difference between Metaplanet and what I think some of the other treasury companies are doing is really our efforts in Japan to spread Bitcoin awareness and adoption as well. So not only do we have a great kind of Bitcoin accumulation engine that Dylan described, but we're also really strongly advocating for Bitcoin in Japan. And Japan is it reminds me a lot of the US in maybe 2018. There's not quite as much content. There's not the number of books that you see in English and Japanese, but it's a yield-starved country. So things like the shareholder meeting that is upcoming in March, it's essentially a Bitcoin conference. And in fact, we do have a public Bitcoin conference program that we'll be talking about, where about 4,500 attendees are going to be there, just learning about Bitcoin, learning about the different products and services in the Bitcoin industry, learning about mining and really everything that Bitcoin provides. And then on top of that, we have we just recently acquired the domain bitcoin.jp, which is a really strong domain, and we have a series of really great educational articles about Bitcoin. So yeah, we're starting to branch out, not just from our absolutely stellar Bitcoin accumulation engine, but we're branching out into other kind of Bitcoin industry opportunities where Japan is just very ripe for the type of disruption that we've already seen in other countries.
Yeah, that's really impressive. I mean, I remember seeing pictures from the last shareholder meeting, which it reminded me of kind of the Warren Buffett, Berkshire Hathaway investor meetings in Omaha. So I think eventually it'll be bigger than that. So in March,
Warren Buffett also have K-pop stars performing? Is that might just
what are the days in March that you want people to block off in their calendars to go take a flight to Japan?
Yeah, the conference is the week of March 24th, 25th. I believe the 25th is the full day event, and I'm sure that there will be lots of folks in town doing all kinds of other Bitcoin events. The big formal announcement should come out next week, so you're getting a little sneak peek. I'm not sure when this episode's going to be published, but it might be around the same time.
Yeah, well, we'll make sure to line it up. I don't want to step on it. Okay, so that's really great news, and that's really exciting because obviously Japan is a massive market. I remember when I worked at Kraken, it would come up occasionally because it's got a lot of regulatory nuances to it relative to other jurisdictions, and so when it comes to issuing the perpetual preferreds, would you say that kind of the bottlenecks are at the regulatory level, or is it at the education, like investor relations level?
Yeah, it's interesting that there's not really the preferred market. It exists, but it's very sparsely utilized. So there's like 5 issues of preferreds in Japan. The entire market. There's 5 public issues of preferred stock, and there's 0 Bitcoin companies that are trying to do it. So relative to most companies, we are extremely balance sheet strong and relatively, I wouldn't say cash flow weak, because I think we have a really strong growing income generation business. It's growing like 50% quarter over quarter. But relative to the size of our market cap, we are more balance sheet strong than income. And so, just explaining this model, explaining our dividend coverage, explaining all of this is something that we're, engaging with the regulators and, eventually, looking to IPO. So yeah, I think, it took a bit of talking just and explaining just as our, strategy did in general. But yeah, I think things are looking good. It's just in general, I think things take time, right? So for a long time, this is a bit separate, but there was one of the kind of the FUD points or points that, was anti-Metaplanet per se. This is what the skeptics would say was, the reason for Metaplanet being or existing in the Japanese market is the tax advantage. So right now, Bitcoin has an unfavorable tax rate. It's as your ordinary income, right? So if you make a lot of money in Japan and you trade Bitcoin, you pay 55% capital gains tax. Listed securities are 20%. And there's no ETFs. And so Metaplanet is sort of a de facto Bitcoin proxy that's tax efficient. And people said, the government is coming in and they have a majority. And in 2026, that goes away. And they just kind of announced and gave some clarity that, all this is coming and going to be reformed, which we actually are in favor of. People think that we're against it. We're in favor of this. We think the regulation's good. It's going to open up the market. It's going to open up the asset class. It's going to kind of formalize the asset class in a way in Japan, where right now it's in this gray area. So people don't know how to think of us when Bitcoin's not technically even a financial asset over there. And, they said, 2026, all this is going to go away. And we just got, updated that they're now saying, it'll change in 2028. And so I think all that to say that Japan moves slow, and they're very, very, it's very nuanced, and they're very particular and delicate with how they move, right? So I think for us, we are moving at warp speed in Japan terms, just with our capital raising, our fundraising. We've had like 5 shareholder meetings in 20 months, right? Typically you have 1 a year. You do something, I'll see you in 12 months. We're calling shareholder meetings every few months to update our articles, to introduce new classes of shares, to increase authorized shares, et cetera. So, I think the preferreds will come, and we're looking to IPO them, but it'll take time. No one's ever done for instance, we have our Class A preferred shares in our capital structure now, which aren't yet issued, which we want to issue. No one's ever done a variable dividend preferred stock in Japan. I mean, no one, I think, prior to strategy had done that ever, right? But these are a lot of things that are in corporate law, very new, right? It can be done, right? But it's just it'll take some time. But we're up for the challenge.
It seems like the creativity was really enabled by AI. I've heard Saylor say that he was avidly using AI to kind of start to design these and then push through. Obviously, lawyers and accountants have their way of doing things, and sometimes it can be challenging to get on the same page. But one thing that Saylor did recently, or Strategy did recently, and something that Strive has done as well with their perpetual preferred, is setting aside a cash reserve. Because as you mentioned, there's this concern about, will you have access to capital markets in the future? Will you have income? Will you have cash flow? Well, let's settle that problem by just setting aside enough cash for, a year or 2 years of future dividends. Is that, do you think that's a reasonable approach, or are they kind of reducing their exposure to Bitcoin in a way with that?
No, I think it's very reasonable. I think the valuation is not obviously the opportunity cost is Bitcoin. But if you can hold enough cash to the point where your credit spread tightens in a meaningful way, then it's absolutely worth it. And I think just in terms of, right, so like our intention is to pay the preferred dividends with our income business. And then, this kind of the second in line is we have the collateral base, whether it's dollars or Bitcoin, fiat or Bitcoin, in the income bucket, right? So if we sell a put, in simple terms, we'd have cash collateral. If we sell a call in our income bucket, we'd have Bitcoin as collateral. And so that, that income bucket has collateral available, and that would sort of be second in line. But we have thought diligently about kind of a yen reserve, right? Kind of a liability match the preferred dividends. And, I think this is something that the market has positively responded to strategy with. I think there was an overreaction in November, December timeframe with the prefs, kind of worrying about the dividend coverage, and credit spreads blew out there a lot. And I think strategy put that to rest. I think also, the convertible bonds for strategy being relatively deleveraged with the equity issuance and with the preferred issuance, I think should also, impact in a positive way the credit spreads for the preferred instruments. Also, the volatility of the credit spreads, right, and the volatility of the preferreds as a second order effect, as the convertible bonds go away, that should kind of ease. So I think those are things that we're pretty lucky that, and we tell this to Michael all the time. We're very happy to have him kind of lead the charge and show us what works, what doesn't, kind of tinker on the fly, and so we can sort of adopt the best practices, coming second or third. And so, I think it makes a lot of sense. Eventually, when there's 1, 2, 3, 4, 5 years of kind of track record and history there, maybe a 2-year or a 5-year or X year dividend kind of reserve won't be needed. But for now, the S&P global credit ratings are saying, well, your big weakness is you don't have cash. And so how do you alleviate that? Well, a little bit of cash, right? It's not the end of the world. They're very much exposed to Bitcoin.
So, okay. So this reminds me of another experiment that Strategy tried last year, which was providing MNAV guidance. And that kind of got walked back a little bit. But more generally, there was MNAV compression over the past, let's call it 12 months. What do you think has driven that? And what's kind of your mental model for fair value MNAV? What should it be? Or is it just context specific?
Yeah, I mean, it's a tough question, because we've also, it was interesting to see on the kind of the Q3 earnings when they gave the guidance that, to watch what happened. It was kind of an A/B test. And, outside of Bitcoin's price going up or down, MSTR relative to Bitcoin in 2-3 weeks where they sold zero common stock went down. Right. And so, and we've seen, personally, or kind of from the Metaplanet specific lens, there's days where in May of 2025, there was a period where we sold 25% of the volume of the stock every day for 10, 15 days straight. And the stock went up every day, literally went up 10 days in a row, and we were 20% of the volume. And then there's periods of time where we sold no stock, and the stock is in, and the stock relative to Bitcoin gets crushed. And everybody's like, what are you doing? Why are you selling? What, Dylan or Simon or Michael Saylor is driving the price down. It's like, no, nothing's happening. And so I think there's periods where the equity markets are very enthusiastic and MNAV expands for a variety of reasons. It could be political, it could be Bitcoin's price, it could be, regulatory driven, narrative driven. There's a lot of different reasons. I mean, the very act of selling common or issuing stock to buy Bitcoin does drive, MNAV closer to 1 if you're selling above 1, right? Just buying more Bitcoin to close the gap. So there is that factor, right? But in terms of fair value MNAV, I think that, the back of the napkin math is, what do you expect the future Bitcoin per share increase to be, right? And if you have a 2x MNAV, I think there's sort of an implicit assumption, whether it's misguided or not, or whether the market's actually doing this math, or it's just, this is what you approximate. But at a 2x MNAV, you could expect 100% increase in Bitcoin per share, right? So I think the market sort of, that's the kind of the oscillator, right? Is how much more growth in Bitcoin terms do you expect, right? And that can be sort of where your MNAV tracks. I do think there is some math where, in market cap terms, that's really like MNAV is enterprise value, right? So it's market cap plus debt plus prefs less cash divided by your Bitcoin NAV. So when you're evaluating whether something's accretive or not, it's in enterprise value terms. But really in Bitcoin terms, if you're thinking purely Bitcoin per share, you have to look at market cap. And so Sailor right now, they're issuing stock at say a 1.1x MNAV in enterprise value terms. If they sold no prefs, it would be positive for the capital structure at large, positive for USD net assets per share, but it'd be slightly negative for Bitcoin per share. And so they're actually very, very intelligently combining the MSTR ATM with the stretch ATM and mixing and matching it so the Bitcoin per share, per common share does increase at the same time as they're deleveraging. And so I think, we're looking at that and evaluating, and I think the market is absorbing it very, very well. We haven't sold stock in a while, and our current floor for issuing moving strike warrants in particular is a bit higher than here. But I think our MNAV's recovered. We hit a low of about 0.9. Right now we're like 1.25 along those lines, and so we're sort of letting the market kind of feel itself out and evaluating. And I think it's a kind of a case dependent, right? You can't say broad stroke what is fair value MNAV. It's really dependent on the market, the management, the excitement around Bitcoin. I think probably one of the other factors that's been positive for us is we took a lot of beatings in Q4 from the Japanese market and then your international market, and a lot of hate was being spewed at us because of the share price in particular, and all of the Metaplanet kind of, I don't want to say copycats because we are encouraged by it in the Japanese market, but a lot of the followers of the crypto or the Bitcoin Treasury strategy in the Japanese market sort of kind of came out and apologized and said, well, we're the Bitcoin thing, I don't know, we might not buy anymore, or sorry for issuing equity, or we shouldn't have done this or that. And we've stayed very steadfast. We've stayed very strong in our approach. We haven't apologized because we said we were going to do this and we followed everything we said. And so now that the sentiment has sort of swung the other way, and people in Japan are saying, okay, well, I kind of love how Metaplanet hasn't backed down. It's pretty impressive. They're just chugging along, and it's no one else has done that. And so I think something like that maybe adds a few basis points to MNAV. Who knows? But it's sort of just kind of the whims of the market, and we'll control what we can control, and that's why having different tools in our arsenal is important.
We spoke a little bit earlier about the difference between saving and investing, and I think even within investing, there's a kind of a different users. There's investors, long-term investors, and there's traders. The long-term investors, I think, are going to be much more interested in looking at the, what's like the MNAV should be kind of positive for a longer-term investor, I think, because it's like, as Dylan was mentioning, what's the future Bitcoin per share accumulation opportunity? But the trader might not care at all about that metric and just see the price in fiat going up or down and making that trade in and out. And so I think, where we're growing in kind of both areas. We're obviously in Q4, I think we're up like 50% in terms of number of shareholders in Japan as the stock price is going down. So we're accumulating longer term investors as the traders are kind of doing their trading thing. And to Dylan's point, I mean, it's if you're from first principles thinking about Bitcoin as the best form of money and for the longer term, like these market fluctuations are going to be expected and less scary. Whereas if you're treating it as a short-term trade, then that's when you might come out and apologize for, Bitcoin being a little bit too volatile. But for a company like Metaplanet, where we're in this for the long run, the different fluctuations just look like different purchasing opportunities for us, whether it be stock buybacks or accumulating more Bitcoin using the Bitcoin generation team. So just kind of was thinking those 2 points as Dylan was mentioning the details there.
Yeah, I think just to add one more point, there is, to Phil's point on the investor versus the trader, it's interesting. The loudest people, are more kind of the retail traders, and we're getting feedback, from some of the largest institutional investors in the world who we had dialogue with in September, October during a public offering, and who have been supporters of us, through our journey. And not to mention, anyone by name, but you could just look at our shareholder list and go to the top, and there's a few shareholders, institutional investors that have only bought and never sold. And we talk with these guys, and they, multi-trillion-dollar asset managers, and they're like, guys, Bitcoin's a 10-year bet for us. Like we're not investing for the next 2 weeks. We're not investing for the next quarter. Nothing has changed. It's only cheaper than it was. This is a great opportunity for us. So keep doing what you do. Don't waver. We're investing in you for you to increase our exposure to Bitcoin. Nothing has changed in that regard. And so, at the same time as, these huge institutional investors and portfolio managers are saying, stay the course, issue accretively, don't be defensive. There's no reason to change anything. Continue chugging along. And, people with, that bought here to sell here to, to trade every 2 weeks are saying, you idiots. And so it's like, the reality is our plan, we put out a white paper in May of 2024. Nothing has changed from our thesis from May of 2024. And our stock has seen like 360 to 70% drawdowns, right? So we're like sort of speed running a cycle, a Bitcoin cycle. Instead of 4 years, we're doing it like every 7 to 9 months. And so, I think the volatility of Bitcoin sort of prepares you to, batten down the hatches and kind of just ride it out. But that volatility, I think, ultimately is an asset for us, and it's something we utilize and leverage.
Yeah. Now, one of the sources of volatility recently has been the Japanese bond market. And I even saw Treasury Secretary Bessent comment on it a few days ago. What's going on from a kind of a macro perspective with Japan, and how does Bitcoin and perpetual preferreds potentially fit into that dynamic?
Yeah, I think we would. Lower interest rates are, I think, better no matter what region you're in. But Japan is very much indebted at the government level. This, I don't think, is going to change all that much. It's interesting that a lot of the kind of equity market tumultuous sort of bouts have been in tandem with the Japanese bond market over the last 24 months or so. When you've kind of seen the Japanese bond market or yields get a bit spicy, you see US tech and Bitcoin and a bunch of other things have kind of little spasms until something is some solution is found. I think we like to focus on Japan, but in terms of bond markets and macro, I think we're just living the same story as the US kind of saw a few years ago. This is a global phenomenon. And so it's not so much that, we've at our shareholder meetings, we've had questions of like, well, is this something about the yen or what, and our answer is no, this is a global fiat problem. And so it's not so much about, the yen or the dollar or the euro in particular. This is just fiat currency, and the supply will always increase. And so there will be monetary debasement. There will be inflation pressures. It's unique in Japan because it just hasn't been seen in about 4 decades. And so there is this push and pull between the fiscal and the monetary was so dominant for so long. And now we're seeing the fiscal reemerge. And so I think, there's going to be probably some coordinated response, with G7s or with global central banks, because the Japanese bond market, seeing yields rise doesn't just affect Japanese markets. It affects US markets. And, there's a lot of hedge fund managers that are, using yen and, buying dollar assets and whatnot. So I think this is a global problem, whether we like it or not. But yeah, no, I think it's business as usual for us. We obviously would like to get our preferreds, out and running, and whatever the Japanese bond market does, we'll do what we can and control what we can control. Ultimately, we can't really do too much about central bank rates.
I mentioned earlier that Japan is very yield starved. What that looks like is for the average saver in Japan, the interest that they're earning on their yen is about, correct me if I'm wrong, like 50 basis points, 0.5%. So the opportunity for the preferreds in Japan are really incredible. In the US, Strategy and SATA have their preferreds that are paying around 10 to 12% interest, which I would call 2 to 3x what an average US saver or investor would expect to get in interest from a bank at this point. In Japan, what we're targeting for the preferreds is something like 4.9%, which would be about 10x what the average Japanese saver would expect to receive in interest. So I think the opportunity for the preferreds in Japan are really groundbreaking, and it's still significantly lower interest than what the US preferreds are targeting right now.
Yeah, and that's the 50 basis point figure. This is sort of a relatively new development. There's like half of the Japanese household wealth, like $6 or $7 trillion equivalent, is in cash at the household level, and it's not even earning 50 basis points. It's earning nothing. Like it's literally in bank CDs. And so with Japanese short rates now, I think are 50, 75 basis points. Money market funds have reemerged in Japan for the first time in 10 years. And that's at 50 basis points. And it's a big, big deal, 50 basis points. But most people, I think the blended average savings rate is like 14 basis points. And so, yeah, even a 5-6% yield on a stretch equivalent, we're calling it MARS, Metaplanet Adjustable Rate Security. I think that's going to be the killer app. Our convertible preferred, which we also want to IPO, that's going to be volatile, right? So it's going to be correlated to Bitcoin. It's going to be correlated to Metaplanet. There's going to be that upside. There is that duration risk. Ultimately, I think the big idea is that strip the volatility and have something that sort of feels like a cash-like instrument, even if it is technically a perpetuity. So that's what we're really, really focused on. And the good news is because Saylor and Strategy and now Strive have gone on this journey before us, we've had a lot of time to be able to educate our shareholders. So educate them about, because a lot of our investors are new investors, right? We thought we would be pulling in, the thesis originally was we're going to find Bitcoiners in Tokyo and Japan that are interested, and then they're going to be in Metaplanet investors. What we didn't foresee was that Metaplanet was going to actually be introducing a lot of people to Bitcoin. So these are a lot of new investors. These, it's a wide ranging demographic: young, old, male, female, housewives, salarymen. But it is, there is a kind of a pretty large new class of investors. And so explaining a capital structure, explaining debt as senior and then common equity and preferreds in between, and it's a bit of a hybrid instrument. So it's been an interesting kind of an exciting point for us to be able to educate people on sort of this niche topic of preferred stock, right? It's usually it's like the part in the investing handbook that you skip, right? It's the boring section. And so being able to kind of explain this and educate before we IPO and before hopefully potentially we IPO, it's been a good process, and I think it's going to pay dividends when we launch.
Yeah, that's a really interesting perspective that you brought on how this is driving Bitcoin adoption, because I think that the OG Bitcoiners sometimes feel like what Bitcoin treasury companies are telling them is sell your Bitcoin and buy our stock, right? So they're always trying to draw this comparison of, here's why owning Bitcoin directly is better than owning the stock. They can't put themselves in the shoes of somebody who wants to own Bitcoin in a corporate wrapper, because it's so alien to them because of, I think, for ideological reasons, right? That here in America, we're sovereign individuals, we're libertarians, we do everything ourselves, we pull ourselves up by our bootstraps. I imagine in Japan, the idea of, hey, we're on a team, we're going to work together, we're going to collaborate, we're going to have a governance process around this, we're going to have a committee, we're going to socialize this essentially, or in the lowercase socialize, and that's really appealing. Obviously, there's plenty of people in the United States that they also like capitalism, they like capital markets, and they see the opportunity to have Bitcoin integrated into them. But it does seem like there's almost a culture war within Bitcoin over whether this is pure or not.
Yeah, I think that's and I saw there was a kind of this culture war podcast drama thing last week. I think the rift is our little echo chamber of Bitcoin people, this Bitcoin hive mind. It's not representative of the actual like global population or even the investing population. Like in Japan, at least, what I could say is, and I don't have the actual data, but empirically, or anecdotally rather, we've brought much more people to buy their first Bitcoin than have ever sold Bitcoin to buy Metaplanet.
Right.
It's like the impetus is, hey, Metaplanet's going viral on the Yahoo Finance stock boards, or the Momentum, Tokyo stock trading, rankings. And then people trade it and they say, what does this company do? And then there's like, oh, they're the Bitcoin company. And they're the what? And so this is, I think, something where, the investing base, we're introducing the asset class to a new investor base, plain and simple. It's not like the Bitcoiners in Tokyo, the 200,000 of them now are only buying and selling Metaplanet. No. That's not what's happening. We're broadening out this thesis to people that never had thought of it like this. It's like, oh, what are they doing? That's crazy, but I sort of love how bold and courageous they are, and they're doing something new. They're trailblazers, right? So, and also we're at the same time, we're encouraging people. We're not saying, hey, just invest in our company. We're saying, no. If you like investing in our company, read this guide, read this article, watch this series. Here, buy a cold hardware wallet. Hold your own keys, learn about self-sovereignty. So it's not mutually exclusive, and I think it's a false dichotomy to pretend it is. Ultimately, what did you think Bitcoin winning looks like? It's not just like we all clutch our hardware wallets, and there's a time and a place for that, and there is absolutely, that is absolutely Bitcoin winning. That's what it looks like, but it also looks like being the most successful ETF in the history of Wall Street, dominating the corporate landscape, entrenching itself in the fixed income markets, right? It's all of those things. And I think people are a bit idealistic sometimes and miss the forest for the trees.
I feel a little bit like the glossary on today's episode, but I'm going to go back to some definitions, right? So a lot of OG Bitcoiners, myself included, we were really excited to rediscover saving, right? In the US and really around the world, a lot of times you're investing before you even have any money to save, right? It just goes immediately into investing. So Bitcoiners rediscovered saving in a good form of money and have benefited immensely from that. However, on the Bitcoin standard, there will still be investments made using the money that you have, the capital and money that you have accumulated. And the question that I would ask those people is, well, are you going to invest in companies that don't have any Bitcoin? Or are you going to invest in companies that do have Bitcoin that are trying to do other things that you can't necessarily do just by savings? So again, it's kind of the difference between saving and investing, where these terms in the Keynesian world and really in the US and globally have become kind of meshed together when they're very distinct, separate concepts. And that's where I think, again, the opportunity is with the Treasury companies is once you feel like you've saved enough capital and you would like to invest in changing the world in some form or another, you have a landscape of millions of different companies. Are you going to invest in the companies that don't have the good money, or are you going to invest in the companies that do have the good money? Or are you going to start your own company? And if you start your own company, well, what form of money are you going to use? So again, yeah, to Dylan's point, it's just, this is what Bitcoin looks like when it becomes the world's global reserve currency. There will still be savings. There will still be investing. For me personally, I wouldn't invest until I felt confident with my savings. But again, that's been kind of ingrained in us to be backwards over my lifetime, at least.
It's also funny. There's if you ever like look at the Japanese X comments, or there's stuff about Metaplanet, you'll see the skeptics. Everybody knows the name Metaplanet in the Japanese market. It's either love it or it's like notorious in a way, and it's this crazy thing, and they're we're like the black sheep or something for like some of the TradFi folks. And one of the you'll see this kind of back and forth debate, and one of the things that the skeptics say is this company is just taking investor money to buy Bitcoin. And our shareholders say, yeah, we know. That's why we're investing in them. We want them to buy Bitcoin. And so it's like it's this very contentious thing. But our shareholders are very, very clear, and we're very clear, right? It's like, this is our mission. This is what we're going to do. And shareholders invest in us for that. And so the skeptics come at it and approach it and say, haha, we gotcha. They're pulling a fast one on you. They're buying Bitcoin with shareholder capital. And our shareholders like, yeah, that's the point. So it's an interesting debate, and we'll see where it goes from here. But we're not wavering in our approach.
And I also noticed, I mean, you're also listed in Germany, in Frankfurt. You're also listed, or have, well, how do people access Metaplanet in the US? Is it ADR or something like that?
Yeah, so it's ADR, and then we have an OTCQX ticker. So it's not a listing. Yeah. It's you want to say it's we have a US listing, but it's the Japanese security traded in the US, and the ADR is custodied by Deutsche Bank. Yeah, it's interesting. It's like sort of there's a website, I forget the domain off the top of my head, but it's like we trade like 100 hours a week, right? So it's like sort of this around the clock arbitrage. It's sort of like the Bitcoin market, right, where Metaplanet shares during the week don't really sleep.
And has that led to kind of a more global investor base, or continue to really be focused on Japan?
Yeah, so we can see the Japanese numbers with clarity. So there's that 220,000 Japanese retail shareholders. We don't know. We can't see behind the broker in the U.S. So we can just see that Charles Schwab, Interactive Brokers, Fidelity, and a couple others own like 25-30% of the stock. Okay. So we could guesstimate, but it's not precise. But I would guess there's 50,000 plus U.S., European, global investors. And so it is pretty cool. There's it ebbs and flows, but there's times when you can look at the X communities or the Discord or whatever, and there's around the clock there's people talking in English, and then people talking in German, and people talking in Japanese, and there's sort of these subsets of different communities. So it is pretty cool. There's sort of like this kind of international movement around Bitcoin and around Metaplanet, and it's the Japanese call it like Dollar Planet, Euro Planet, and Metaplanet. So it's cool.
Going back to not to focus too much on them, on the critics, but to me this is like the most like cypherpunk crypto anarchist thing imaginable, that you have thousands of people around the world investing in a corporation that is saving in a cryptographic asset, and this didn't exist a few years ago, and it just highlights kind of where we are as a civilization, that we have all these massive communication networks that enable all of this, and this hive mind. So I really think that you, Metaplanet, are at the cutting edge of something really unique, and that it's exciting to see. Really looking forward to seeing what comes from your investor meeting in March, and encourage folks to get information about that and make their way over there. Will there be Bitcoin sushi?
We could do that maybe if you come out. But yeah, it's exciting. I hope you come to Japan and see it firsthand.
We'll talk offline.
Well, yeah, Pierre, it's been great to have a talk, and we'll continue to go forward with our mission to serve as a speculative arbitrage on the Japanese capital markets, and execute a Bitcoin standard as you laid out, I think almost 12 years ago at this point in your prophetic writings.
I love to see it. All right. Thanks, gentlemen, for coming on. We'll have you back on soon, and looking forward to more great news coming from Metaplanet. So where can people find you all on social media?
Yeah, our handle on X is at Metaplanet. Our website's metaplanet.jp. We have an analytics dashboard and all of our disclosures, and we'll be looking to expand that and kind of continue to improve our investor dialogue and our dialogue in general with Bitcoiners around the world.
Awesome. Well, thank you.